What does it really mean to live off dividends? Over the past 4 years, I've learned a lot, from the unexpected challenges to the small victories that make it all worthwhile. What if I told you that over the last 4 years, I've managed to live off my investments, specifically dividends? Sounds like a dream, right? But it's not just about sitting back and collecting money. Dividend investing comes with its own challenges, and today, I'm going to share what I've learned along the way. In this video, I'll walk you through the real story of living on dividends. I'm not talking about unrealistic promises or get-rich-quick schemes. Instead, I'm going to share my actual experiences, the highs, the lows, and everything in between. I'll show you the numbers, the strategies that worked for me, and some mistakes I made along the way. You'll hear how my dividend income has grown, what stocks helped me get there, and why patience and consistency have been key. If you're curious about how dividend investing works and whether it's a path worth considering, you're in the right place. So, whether you're new to investing or already building your portfolio, stick around. This video is packed with valuable insights that could change the way you think about financial freedom. Chapter 1. My Journey into Dividend Investing. So, how did I get started with dividend investing? Well, like many of you, I was looking for a way to build wealth without constantly trading or stressing about the stock market. I had heard about dividends before, but it wasn't until 2020 that I got serious. In the beginning, I wasn't investing huge amounts of money. In fact, I started with small, regular contributions into stocks I had researched. At first, I didn't fully grasp the power of dividends. I was focused more on seeing instant returns from my investment. But eventually, I realized something crucial. Dividends grow with time, and reinvesting them is where the real magic happens. As I started to understand this better, I shifted my focus. I began to prioritize companies that paid consistent, reliable dividends over those that promised big gains but carried more risk. I wasn't chasing high-yield stocks either. Instead, I looked for solid, dependable companies that would keep paying me even during tough times. This change in strategy was a game changer for me. It was less about getting rich overnight and more about building a steady, long-term stream of income. And that's when my dividend journey really began to take off. Chapter 2. What my portfolio looked like in the beginning. When I first started dividend investing, my portfolio was far from impressive. It wasn't filled with big-name stocks or high returns, but it had a mix of companies that I believed in for the long haul. I began investing in a few well-known dividend-paying stocks like AT&T, Procter & Gamble, and Chevron. These companies weren't offering sky-high dividends, but they were reliable, and that was key for me as a beginner. In the early days, I was bringing in just a few dollars in dividends each month. It didn't feel like much, but I knew that over time, this would start to grow if I kept adding to my investments and reinvesting those small dividends. Looking back, my portfolio wasn't flashy, but it was built on the principle of stability, which is crucial when starting out. It was the foundation of everything that followed. Chapter 3. Growth of my dividend income over the 4 years. The growth of my dividend income over these 4 years have been steady, but transformative. In my first year, the dividends were minimal, barely covering a few basic expenses. I was averaging around $15 to $20 per month in dividend payouts, which doesn't sound like much. However, I wasn't discouraged because I knew that dividend investing was a long-term strategy, and growth doesn't happen overnight. By the second year, the benefits of consistency started to show. My dividend income increased significantly thanks to two key factors: regular investment and reinvesting the dividends. Reinvesting those small payouts made a huge difference, helping to compound my returns. At this point, I was seeing around $100 to $150 per month in dividends, a noticeable improvement over the first year. The third year was when things really started to snowball. My monthly dividend income jumped to over $200, and my highest month saw over $300. This kind of growth was driven by a combination of increasing contributions and holding dividend-paying stocks that consistently raised their payouts. Companies like Procter & Gamble, Johnson & Johnson, and Chevron played a huge role here, as they not only paid steady dividends, but also increased them regularly. Now, in year 4, I'm averaging about $200 per month, with some months going beyond $250. My portfolio has expanded, and the snowball effect of reinvested dividends has truly kicked in. Overall, I've seen my annual dividend income grow from around $180 in the first year to over $2,200 today. It's a clear demonstration of how small, consistent investments can turn into a reliable stream of income over time. Chapter 4: Key Lessons Learned About Dividend Investing. Over the past 4 years, I've learned several critical lessons about dividend investing that have shaped how I manage my portfolio today. First, patience is everything. Dividend investing isn't about quick returns. It's a slow, steady approach that rewards consistency over time. Early on, it was frustrating to see such small payouts, but sticking to the plan and reinvesting those dividends has paid off. The key is to trust the process and allow compounding to work its magic. Second, I learned the importance of avoiding high-yield traps. It's tempting to chase stocks with unusually high dividend yields, but those often come with higher risk. I fell into this trap briefly when I started, attracted by the idea of quick income, but soon realized that many of these stocks couldn't sustain their payouts. Instead, I shifted my focus to companies with a strong track record of growing dividends, even if the initial yield was lower. Another valuable lesson was understanding the power of reinvesting dividends. Reinvesting dividends allows your portfolio to grow exponentially over time. In the beginning, it may not seem like much, but as your dividends are reinvested and start earning their own dividends, the snowball effect becomes noticeable. This is the real power of long-term dividend investing. Finally, I've learned that diversification is crucial. While it's great to have core holdings in strong dividend payers like Johnson & Johnson or Procter & Gamble, relying too heavily on a few stocks can be risky. A well-diversified portfolio not only provides multiple streams of dividend income, but also protects against market volatility. Spreading investments across sectors like healthcare, utilities, and consumer goods helped ensure my portfolio stayed balanced. These lessons have been fundamental to growing and maintaining a stable dividend income stream. Chapter 5: The Reality of Living on Dividends. Living on dividends might sound like a dream, but the reality is more complex than it seems. Over the past 4 years, I've experienced both the highs and the challenges of relying on dividend income. One of the biggest surprises was how slow the initial progress felt. In the first year, my dividends were barely enough to cover minor expenses like groceries or a small utility bill. It was far from being able to support a full lifestyle. However, as my portfolio grew and I continued to reinvest dividends, I started to see a steady increase in my monthly income. By year 3, I could realistically cover more significant costs, such as part of my rent or regular bills. It's important to note that while dividends can provide a reliable source of passive income, it takes time and a disciplined approach to grow them to a level that can truly support daily living expenses. Another challenge is that dividend income isn't guaranteed. Companies can cut or suspend their dividends during tough times, and the market itself can be unpredictable. That's why maintaining a diversified portfolio and selecting companies with a solid dividend history is so crucial. That said, the satisfaction of watching dividend income grow month after month is very real. Today, I'm at a point where dividends can comfortably cover essential expenses, and with continued reinvesting, I expect this income to only increase. It's a long strategy that rewards patience and persistence. Chapter 6. What's next? Future of my dividend portfolio. Looking ahead, the future of my dividend portfolio is all about consistency and growth. I'm not planning to make any drastic changes, because what I've learned over the past 4 years is that steady, disciplined investing is what yields the best results. My focus will remain on reinvesting dividends and continuing to build my positions in high-quality dividend-paying stocks. I'm also keeping an eye on dividend growth stocks, companies that not only pay regular dividends, but have a history of increasing those payments over time. These companies are essential for long-term growth, especially as inflation and living costs rise. By focusing on companies that consistently grow their dividends, I can ensure that my income keeps pace with these changes. One of my goals moving forward is to reach a point where my dividend income fully covers my monthly living expenses. While I'm not there yet, the progress over these 4 years has been promising. And if I stay the course, I'm confident I'll get there in the near future. Ultimately, the key to my strategy remains simple. Keep investing, stay patient, and let the dividends compound. It's a long game, but it's one that works with time and consistency. If you're new to dividend investing or already on your way, I encourage you to stay the course. There will be ups and downs, but as long as you remain consistent and patient, the rewards are worth it. I'm not where I want to be yet, but I'm a lot closer than when I started. And that's the beauty of this strategy. Thanks for watching. And if you found this video helpful, don't forget to like and subscribe. I'd love to hear about your own investing journey in the comments below.